Good morning, I'm Tim Carter. I'm a client portfolio manager on npower's optimisation desk, and welcome to this morning's market update on Tuesday the 7th of July. So markets have started relatively soft again this morning, with Euro and Chinese woes continuing to weigh on oil and gas prices. The key headlines to look out for again today: number one, any development in the Eurozone crisis with Greece. Number two, the continuing pressure on oil markets from the Euro weakness, the Chinese stock market fall, as well as an impending Iranian deal. And finally, number three, the UK prompt fundamentals, which currently look to be reasonably balanced. That's it for the key headlines. If you'd like any more information, please continue to watch. Otherwise, please contact us on our email address. So, looking at the Eurozone crisis in a bit more detail to start with, we've seen the ECB last night announce that they won't be extending any emergency liquidity assistance, so Greek banks are now remaining closed until Thursday at the very least, with ATM withdrawals limited to just €20 per person per day. Eurozone leaders are due to meet today in an emergency summit in Brussels to discuss the situation, with Germany and France particularly urging Alexis Tsipras to make precise proposals following the no vote in Sunday's Greek referendum. Looking now at the oil markets, we're seeing Brent benchmark contracts trading just under $57 per barrel now. That comes along with a decline in WTI, the American benchmark, which is now just under $53 per barrel. Those levels are down around 5% through yesterday, which was the worst trading day for oil since mid-February. We're seeing the continuing euro weakness hammering the price of oil as Eurozone buying power decreases with the US dollar denominated commodity. The Chinese stock market fall, which actually dropped around 30% over the last 30 days, is also denting investor confidence. But we did see a bit of a rally yesterday. Stocks were up 8% through the middle of the day, but then did correct downwards to end the day around 3% higher. That's following a huge amount of liquidity assistance injected by the Chinese central bank to help stabilise the markets over there. We've also got the Iranian deal, which is weighing on the prices, so we're expecting a deal any time now, which would see sanctions lifted and more oil flood the market. But the timings of those lifting of sanctions is still a sticking point. Finally, a quick look at the UK prompt fundamentals. It's taken a bit of a backseat really in terms of price drivers over the last week or so. Currently we're about 2.7 MCM forecast undersupplied for the day, with relatively no change on supply and demand fundamentals, with Norwegian flows still suppressed by the ongoing maintenance. On the power side, peak margins are a little tight today, just over 11 gigawatts, but with wind forecast to pick up from around 2.5 at the moment to around 4 gigawatts this afternoon. Things are still relatively comfortable as we're in the summer months. That's it for today. Just remember to keep an eye on that Greek and Chinese situation and any deal on Iran, which might drive prices today.